Many friends here to talk about this big trend on Nvidia Day. Let me put the disclaimers out there. We know nothing. Well, my guest knows something. I know very little. Phil Pearlman knows a little more than me. We are live on the YouTubes and the Twitters for a special episode of Trends with Friends with some dear friends that I don't get to see that often. JC, we killed the technician for today. Today's not about technicians. And, JC's super busy on his own today. But Stockwood started something today called Nvidia Day. Maybe that's the top. Some people said, well, if you're having a Nvidia Day, isn't that the top? And I had to say, it's a little less stupid than GME and Apes and Laser Eyes to be talking about one of the fastest growing companies of all time. Definitely, we'll talk about some strategic issues and capacity issues and cyclical issues here. But joining me today, obviously, Phil Pearlman, who will take over moderation pretty soon. Hi, Phil. Phil can't talk. He's sweating. He just went for a run, and even if he talks,
a little schwitz. It was a little hot outside. I was expecting 70s. It's like 80s.
My friend, you don't know hot. We're in Dallas.
Yeah.
Oh, what do you got? What's up there now on the temperature board?
It's going to be 98 today.
98. That's like 15 degrees hotter.
That's balmy compared to Houston.
Phil's just going to continue to sweat during the show.
Profusely schwitzing.
Don't get alarmed if he takes off his shirt. The patchwork chest is due to a lot of hair testing and removal, a science project, not related to AI, just related to chimps. All right, so Phil's here. He's going to lead the discussion because he's fascinated by both the behavior of what's going on and this massive trend. Joining me, a good friend, a cycling buddy. We met on Twitter. Raja Doddala. How do you pronounce it?
There you go. You got it.
Doddala.
Yeah, there you go.
It's like Kamala. Doddala. It's Doddala. Doddala.
Same phonetics.
So Doddala. So Raja's in Dallas. We have two Dallas people here who actually live very close to each other and just meeting. Raja and I, Raja was at 7-Eleven running Corp Dev for a long time, but a cyclist. We invest together. We invested together in distance. He is a partner at Churchill Asset Management. Just quickly describe it.
Yeah, Churchill Asset Management is like about $50 billion private asset manager, private equity, private credit, venture, growth equity, and I look after the venture and growth equity part.
And we just share notes all the time. Roger knows that we talk about early stage, we talk about growth stage, we share manager ideas, we think alike. We don't know if that's good or bad, but we definitely think alike and have traveled the world together, and fast friends and concentric circle of friends in tech and investing. Chris Camillo has been one of our favorite guests. He is also in Dallas. He has been involved in 3 or 4 murders, not on the scene. I don't think you were never on the scene, and there's never been a Netflix special about any of the establishments that you run. Tell us a little bit about yourself, Chris. It's an inside joke. He has not been involved in any murders.
I'm just a retail investor, as Howard knows. I call my type of investing social arb. What it actually means is you're just basically an observational investor. So you're trying to detect change and connect the dots between change that's happening in the world and investable opportunities. Sometimes it's in the public market, sometimes it's in the private market, but you're trying to enter those trades at the point of information imbalance when you know something that others don't, and you're trying to exit those trades at the point of information parity when the rest of the world is caught up to that alpha that you had been early to. So it's pretty simple stuff, and that's everything that I do.
But you also have the show Dumb Money, which is super popular.
Yeah, Dumb Money Live. Dumbmoney.tv is kind of our gateway to find out about all of our handles and our shows. But we do once a week on YouTube, Dumb Money Live, and we basically just talk about what we're seeing in the market. That's it.
All
And
right.
but
And
I had I think Unknown Market Wizards was a recent book that covered the social art methodology that I focus on. If people want to read more.
okay, what's funny is this. He's starting out slow. This is a very reserved Chris Camillo. Hopefully, he has a little protein. He's faking it. He's faking it. And then the AI whisperer himself, my pal, longtime pal. We Goldman Sachs for 20 years. First internet boom took pretty much every company public. He's seen everything because that was the internet. He is excited by the AI boom and came back, writes a fantastic Substack that everybody here knows, and has been a regular guest now for the last few months on our show as we didn't know there'd be a Nvidia day, but so let's get right into it, Phil. And so today on StockTwits, it is earnings day. That's what we're doing, the special Trends with Friends. And I don't know if we can pull up the feature, but on StockTwits now you can, which has become really popular very fast, is we've integrated earnings calls and chat, separate live chat stream into the site, into the apps, and thousands of people. I mean, probably 10 to 15,000 people will be there discussing the earnings live tonight, listening to the conference call. So I imagine technical difficulties will ensue, seeing that Twitter can't do this as well. So, my team is hard at work preparing. The team at StockTwits. There's some interesting breaking news today, which we'll get to, which is just SMCI. Kind of imploded the I don't know. Somebody came out with the research, the Hindenburg report, whatever. Stock's down 60%, 50% already, but then another, 10, 20% the last few days. And then they said they delayed one of their filings. They're Nvidia's third largest customer. Mike, from the very first internet boom, one of the things that top ticked Cisco, and then I'll let Phil take over. One of the things that top ticked Cisco is their customers. Like in the end, the bubble was the customers weren't their customers. They couldn't pay. This cycle, I've said the biggest difference is, Facebook, Apple, Amazon. Everybody can pay their bills right now. FANG can pay their bills. So can Saudi Arabia. So can pretty much everybody pay their bills right now.
So can the Chinese. There's a whole industry buying.
Do you think that's big enough difference in this, like to just rule out the bubble? Is that enough of a difference between 99 and right now, even with the SMCI kind of worries?
Is that to me? Yes.
Yeah.
So the demand picture on, and we can go into detail at every part of the tech stack, from chips to data center equipment to networking gear, is, and I've not seen this in 30 years of watching this. All these tech waves. We've got visibility at least 6 to 8 quarters. I'm in San Francisco right now, meeting a lot of the usual suspects and a lot of big companies up and down the tech stack. And everyone is basically literally focused on their CapEx plans going into 26, 27. And that's just on the training of today's models. We've got supply constrained on Nvidia chips. They've got 90% of the AI chip market. And so downstream, that has big implications, obviously, for TMC, for ASML, the usual suspects. And so secular-wise, yes, we have fair bit of visibility. The negative for the people who are looking for negatives is that tech stack, the equipment companies, typically, there are always going to be ups and downs in terms of quarter by quarter shipping components of this chip versus that chip, this equipment versus that equipment. What's happening to super micro, as an example, in terms of accounting shenanigans, is a case in point. And that's in today's world, a 60%, in previous tech waves, a 60% downdraft might have taken several days, several weeks. It's happening in days, given just the immediacy of our markets today. But those kinds of things we have to watch for. But the secular tailwind for chips and chip making equipment and data center remains as strong as I've seen this for a while. And I think we've got visibility going into at least the next year and a half, if not longer.
Okay, so that's SMCI. I just wanted, because that was kind of breaking news today, which, with so much money on the line today, again, I'm not trading earnings and speculation of $300 to $400 billion moves, which is, not funny money at this point. So Phil, thanks for toweling off. So let's start with the Amazon. You've got this thing going. So take it away now from here with the Amazon.
Thing. Okay, so Amazon CEO Andy Jassy. First off, shout out to Sarah Normus on Twitter. This is where I first saw the quote. Jassy's recent quote: "The average time to upgrade an application to Java 17 plummeted from what's typically 50 developer days to just a few hours. We estimate this has saved us the equivalent of 4,500 developer years of work." Yes, that number is crazy, but real. So I'm interested in, I mean, we're seeing real efficiency on a massive scale potentially added into the market, infused. And I'm really interested in everybody's impression of that.
Let's start with Raja.
Yeah, similar data point, Phil. I think Sarah Tevel wrote an article saying that co-pilots are saving anywhere between 10 to 20% coding efficiency, and she has a figure that says we spend about $1 trillion worldwide on developer expense, and that's $100 to $200 billion in savings and productivity. But where is that showing up, though? Does that mean they're just going to use that capacity to do something else? Is that going to show up in cost structures? Who's going to? I'm unclear as a private investor where that value is accruing to.
Michael.
The answer directly, yes and yes. It will show up on productivity. It does not mean demand for software developers goes down. If anything, it expands it. There's new total addressable market in terms of the amount of programming that's coming. What we have seen with AI, generative AI, over the last 2 years since the ChatGPT moment is the beginning of the beginning. There's hundreds, if not thousands, of applications that go into the reasoning and agentic workflows, etc. You're going to need programmers for all of that. So the market for developers is again very, very strong. And the article that Phil you mentioned are these are the best programmers on the planet at the big Mag 7 companies. These are the ones who are doing the heavy industrial grade stuff at Amazon, at Microsoft, at Google. And yes, for the last year and a half, as you mentioned, for the last couple of years, this was actually the home run for Microsoft in terms of Copilot GitHub over the last couple of years. It's the one area that we can point to that AI makes a difference. It augments productivity from the worst programmer to the best programmer, 10, 20, 30, 40%. Sarah's numbers are on mark. I've seen numbers even higher at 40, 50%, talking to a variety of folks like Replit and other people. And what we're seeing on the programming side of the programming assist side of it is the beginning. What we're seeing today is just how this is impacting actual deep programmers across the tech stack. What we're about to see over the next 2 or 3 years is how the AI technologies are going to make all of us programmers. So in other words, there's another 1 million to 2 million at least programmers who are not well versed in generative AI in all
Howard,
of these.
You and I are not about to become programmers, are we?
That's what I'm saying.
But the one thing I just want to point out is, Chris, you will be able to generate within a couple of years an app through some text and visual prompts that will at least be very good sketches of apps that will help you run your restaurants or bars. And then you'll be able to give it to your tech people and they will iterate and make it scalable. We are seeing an ordinary language basically becoming the programming language for 8 billion people. So let's conservatively say 1 billion people.
And I will chime in to say what makes Jensen Huang different to me, or however you pronounce his name, I apologize to him.
Jensen Huang, yeah.
Yeah, Jensen Huang. What makes him special to me is just a couple of the quotes. When he, as a humanoid, as someone who doesn't understand coding, can't speak other language, even though I had to go to Hebrew school and they threw Yiddish, French, English, Hebrew at me before I was 10 years old, and nothing stuck except math. Nothing stuck to me except math. So, that was my special purpose, simple math. But coding wasn't interesting to me. Engineering's not interesting me. Flashing things seem to be flashing prices. So in a world where Jensen said, finally, what spoke to me of the way he explained it to me is what you're saying, Mike. I know it's not necessarily for me, but to be able to replace that engineer that I used to say hug a designer, I used to say punch a banker, hug an engineer. And now I say punch an engineer, hug a designer. Right. So we went from this world where I hated bankers, financial leverage, to social leverage. And now we've exited this era of social web, death of social media, to the point was like, it was a fantasy. You were going to talk to, he had 5,000 friends. The real thing is, how do you build product? And so now the design is more, or the prompt is more important than the actual engineering. That is what excites me about NVIDIA, is to be a business person again matters. Chris, you're a business person in Dallas. You go from tech to running club bars and restaurants. Being an entrepreneur shouldn't just be about, can you code, right? And so there was this huge misdirection of Web 2 around software engineering. Everybody went to Stanford to get an engineer and build an app. In the end, let's be crazy. That's silly. The only thing that can destroy the App Store is apps not becoming that important anymore. So, Chris, what do you think about all this, and how do you think about it?
So, you're right, Howard. As kind of like, as an investor that is like deeply involved with just numerous businesses across every sector operationally, right down to, I'm headed to my new restaurant bar, after this show to meet a city inspector. The limiting factor has always been labor, right? The limiting factor has always been labor, and people just don't understand the importance of that bottleneck and the degree to which our civilization will change if we're able to break through the bottleneck that is both white collar and blue collar labor. And that's exactly what this thing that we call AI is all about, right? So, like, the three biggest things that I have benefited from as an investor is I was able to see and monetize the internet revolution right around 2000, right? I was able to do the same thing with the smartphone revolution. I saw it, I acted on it. I did the same thing in the early days of cloud computing, specifically with Amazon, and then later with Microsoft. And what I'm seeing in the first, what I would call 24 months that this thing we call AI is really kind of out of the gate, the fact that we're even having conversations right now today about these sorts of labor, we're so early. I never would have imagined that we would even be having that conversation in 2024. Sure. I thought that was a 2026 conversation. I would say this is probably somewhere between 5 and 10 times larger than the last three things I just discussed: internet, smartphone, and cloud computing combined. And what a time to be an investor. Like, I think I say this every year, but there's never been a better time since I've started investing 30 something years ago to be an investor.
Michael,
this is the biggest change we have ever seen as humans. And with change comes opportunity, right? So, and we've never had, but it's not just how big the change is, it's how fast the change is coming. So when you have this, when the size of the change, the magnitude of the change, and the quickness of the change equates to the opportunity as an investor. And that's why I say nothing has ever even approached what we're seeing right now with this cycle.
I'd like to just jump in on one.
Here was my cue. Here was my cue, guys, and this is why we do the show. Is Michael and I have been friends. He's on the StockTwits board. Like, we saw things with social that got me off the bench. That in my 40s said, you know what? I'm dropping everything that I think I know and going into the social web. I'm an idiot because of what? Fred Wilson, and because of Twitter, which was on a BlackBerry. So I equate to what you're saying to like me getting excited about the social web when YouTube was cat videos. When and this is what people like, and I'm a skeptic. Now, granted, I was early to that trend as a user. I'm not an AI user. I don't use ChatGPT, so I'm at a disadvantage. I fully admit it. That's just going to haunt me. But like you said, in the era of this is becoming an era of investor where money is getting passed down, and the language of investing is a language everybody should know. I'm still going to be okay because I know how to invest. And I know how to put thoughts together and network and look at price and look at markets. But for everybody else who thinks AI is silly, I show them the BlackBerry, which people thought they'd have to pry out of my dead hands in 2007, which was before the iPhone 1. And there was no web on the BlackBerry. We were tweeting from a BlackBerry. And bankers thought BlackBerries were cool because they could go around the email system so they could have inside information, which Pavel from Telegram is now going to be murdered over that feature in France or Russia. So that's what you're right, Chris. That's why you're a go-to guy. So, Mike, what were you going to say?
I want to basically supplement Phil's original question, AI helping programmers. That is just the first incidence. That's great to see from Andy Jassy. Where this is going is I do believe, programming for the rest of us. And to Chris, your point about restaurants, and Howard, a subject very close to your heart, falafels. I was at my favorite falafel restaurant in Houston. They make the best homemade falafel, hummus, fulmad, and all of the stuff. The father cooks all the stuff in the kitchen. He was complaining to me that they can't get their menus done right, both online and offline. And Chris, you may know this problem. And he talked about how he fired 2 or 3 menu guys. They just don't return his calls, etc. His son was there. And the son is relatively computer proficient. I pulled up my laptop. I put up Anthropic. I had them talk into it and describe, and they just describe the menu they want, how they want it. And Anthropic was drawing it using Artifact on the right, the full schematic. And they were like, oh my God, we've never seen anything like this from any of the vendors we've ever done this. And they were just stunned. And it's nothing dramatic. It's just what they were talking, it was instantiating it and building the code so you could actually run it locally on your machine. So the next step for them, and I told them, just find either their existing vendors or the other vendors who can make bulletproof versions of this, and then iterate, and all of a sudden they're going to have a new gateway into their business that they never had before. And that is today, 2024.
Hey, Chris, on that point, like how far I can see the creative task being sort of, done like what you're describing, Michael, but Chris, are we anywhere close to a small business person, which you play one part-time, like using AI to supplement physical labor? Are we anywhere close?
I would
now we're
say
getting
yes.
into robotics.
Let me just let me touch on the menu thing first of all. It's kind of a funny story. We had such an issue with online menus and menu integration that we were so disappointed by the software out there. Well, we didn't have AI yet, but we actually started our own menu software company just for our restaurant and our friends' restaurants called Captive Diner. So if you go to captivediner.com, please share. If he wants it, we'll get him a login. It's the best menu, the best menu, and we only give it to our friends. So it's like we have a few friends in Dallas that have restaurants, and we use it at our restaurant, and it's amazing. But
he's looking for a new vendor. I'm going to connect you guys.
Captive Diner. I'm serious. Connect us. We'll hook them up. It's the best. But
I think part of the problem with this, guys, and just correct me if I'm wrong, sorry to interrupt your thought, is the web's so broken that the true time we need the social web for people to discover all this stuff, everybody's got such exhaustion from the app economy and like yelling at Facebook and Twitter and Facebook and LinkedIn and all these fucking behemoths that control the pipes. No one is listening to anybody if we had AI during the beginning of the web economy, we'd be like, it seems like Web 2 slowed us down for what was really coming, which is kind of the bummer of these pipes. Like, if you're not doing a stupid live YouTube Twitter show, you're out of the loop because no one's clicking links. The links are all hidden. So these products that everybody should be sharing in a Web 2 era are hidden behind, a shadow band on social media sites, which is really the dilemma of why AI is kind of lagging. We hyper scaled cloud and Web 2, and that's hindering this true revelation. Because we can't even use these tools because you have to discover them from a friend. You can't go online and like we used to do with Fred Wilson in the beginning of Web 2, everything was discovered, TechCrunch, everything was like a miracle. And that miracle became a nightmare. And now that the miracle is here, and horror, obviously AI is not perfect, but the miracle and horror of AI is here, no one's really trying the products, right? Like even OpenAI, it doesn't have that much serious adoption for how cool it is, and that's including me. Like, I'm guilty of this.
With or
And it's
without
about to
Web,
get more cooler.
with or without Web 2, we, the collective we would have been slow to understand the implications of what's happening right now and to make adoptions. And that's, I think there's at least two reasons for that. One is we are just slow. Our brains are inefficient information processors. We're not, we're more like a Commodore 64. We just don't process information that quick. It takes us a long time to get it through our, thick skulls. And then number two, and I think we were just hitting on this a minute ago, we're not good at scale. Like, we're especially bad because
as I said, we were faking it. People thought you had terms like growth hacking from Chamath, who you're dressed like today. Congrats. And those were made up terms. There was no growth hacking. The products were the growth hack. Now, when people actually need to share it people didn't learn the skill, and now they need that skill. How do you make this cool product get seen, and there's nowhere to show it because people spent 10 years.
The
good news is
no one would trust a product hunt anyway. So
it's going to take a while. To what Chris was saying before, I was going to ask Chris before about like what, because he's sort of doing this like human behavioral arbitrage thing. And I was going to ask him like, what inning are we in? But like he answered the question before I even asked it.
Early first inning, but again, and I don't want to talk too much about robotics because I'll take over the whole show. We'll never get back to Nvidia.
No, I'm looking forward to the robotics.
Look, if we combine robotics with sex, I think we have a show.
I want to directly answer the restaurant robotics question. Yes. My favorite Humanoid CEO, Jeff Cardenas at Apptronic in Austin, promised me that within single-digit years, not double-digit years, I would have a humanoid in my restaurant kitchen, side by side with other chefs,
like a sous chef, like a humanoid,
full humanoid chef with single-digit years.
You just wrote the Bear season 5. You just wrote the Bear season 5.
Yeah, I mean, here's what's so crazy, guys. Like, I have 70 employees at an independent restaurant in Dallas, and the majority of those employees should be doing something more interesting with their life in 2024 than the thing that they would normally be doing the next 20, 30 years working at my restaurant.
Have you met my son? Have you met my son?
I think maybe one. Yeah, I did one.
It's a joke. It's a dishwashing joke.
Yeah.
Anyways,
well, your daughter. I met your daughter.
Yeah.
Chris, I will go. I agree with you.
But you're right, Chris. People need to aim higher when all this stuff is happening. Absolutely.
I agree with you directionally on the direction of the humanoids in the restaurant. But I would probably venture, and we can go into in detail if we have time or later offline. It's probably a little bit more toward the double digit rather than the single digit. I have a whole bunch of reasons for that. We can talk about
it. For allocation of resources, I probably agree with you. Not because we can't get it done in single digit years, but because there'll be a better use for the humanoids that we are able to produce than being in that particular role.
I will jump in. I'm going to recommend everyone go to Chris's web page. He has because if we may not get to robotics on this call, so I do want to recommend that the thread that Chris has. It's a 15-point
on Twitter
on Twitter X on robotics, and it's a very well organized in terms of a thread on why robotics is going to be very, very exciting. And I agree with you directionally on all of it, especially the first 10 points in terms of how many vertical segment market opportunities there are. My only point on it, because I've lived with technology for 30 years, technology scales, human life scales far less. And so it will always take longer. So I would say, because everything you have is in the next 3 to 10 years, I would add another 5 at least to that. That's my only point on robotics and humanoids. And we can talk about it at length. And the one area specifically, because it's actually more applicable to robotics today, is AI and robotics today need data, customized data, massive amounts of it. And especially in restaurants, especially humanoid robots, the data barely exists. This is why I think Elon was going to take a lot longer on his Optimus, because he does not have the data sources today. He will get them. It'll take another 5 or 10 years. I want to stop there.
No,
Thank
just
you.
AI has a sense of humor. That robotic post you had, Twitter AI had Donald Trump's stock falling, media stock falling below 20, trending right next to your robotics post. So the world is indeed round and sane at some points. Even in an AI world, it picked up that trend is over.
Yeah.
AI is here. People with data are in control. People have this is the best time in life if Jensen Huang is right and programming becomes not a language like Chinese to most, where people can uplift themselves with their brain and with their network. And so, and the other thing that everybody keeps overlooking in all the doom and gloom is the money printer go burr, and we're at a green toner. All these things that we make fun of have really why we have this innovation. Right? Without this cash that was dumped, sure, we have such misallocation of capital, which, Raja and I talk about all day long, and who we're going to give money to or allocate money to. So the money printer go burr is one of the worst things that's ever happened in terms of entitled society and rich Americans and now rich Chinese and rich Arabs and however you want to make fun of the rich and Chamath and all in podcasts and power, but you can't stop the machines. If I were to have Brad Feld on the show and he would love to come on to talk to this group, he told me 20 years ago when he invested with me, is like, the machines are going to fucking come. MIT guys, like, the machines are coming. He goes, I can't believe I'm using a keyboard and a mouse. And this is like 2006 as he gave me money for my fund. And he goes, I don't even know, you're in it. Like, tech is, we're out of business. We're all out of business. He was so far ahead of this. And they're here. And we're still kind of using a keyboard and mouse despite all this. We're still kind of using a keyboard and mouse for 90% of our computing, despite AI, which is another thing.
There are only three major innovations in user interfaces in the last 30 years. Command line, which is typing in stuff, graphical user interface, which is the mouse and pointing, and multi-touch on your phones. That's it. And now voice is coming. That's the fourth one potentially, but it's early days. And Chris, I think, has some points on UI that I want him to go into, because we are at the beginning of trying to figure out how to deal with AI, and we haven't found the right interface.
But on data, I think that's a really important discussion topic, because as this has been discussed, there's really only these 2 points of data that we can really scale out for learning. One, synthetic data, which is really important, but the other that everyone keeps talking about, and I've been talking about this for almost 2 years, is visual data. Visual data is incredibly important, and the way that we get that visual data, even if the humanoids aren't ready, is by deploying the robots to start collecting visual data from different perspectives, from human perspectives, right? Because we just don't have the visual. When we think about visual data, we think about YouTube and TikTok and this and that. Like, that's not the visual data we need. We need in-life visual data and not security cam data. We need interactional visual data, a massive amount of it. So I think getting those bots out to start collecting that data sooner than later is going to be really important.
You don't think you're
going to have a revenue source on your restaurant that you don't expect. You will be offered by companies and startups. If you put allowed to put cameras in your kitchen and your restaurants, and they watch how your existing humans are serving people, and this is going to be a huge new source of data for the restaurant industry around the world, and that is going to be used to train humanoid robots and so on. That alone is going to take 5 years to happen, and you will actually, I would guesstimate, will make at least 5 to 10% of your additional revenue from that source. That's where the visual data, you're spot on. It does not yet exist on YouTube. It does not exist on anything out there.
Michael, do you think all the workers will have Ray-Ban, like Meta glasses, and recording everything that they're doing?
Eventually,
they're the closest. I think they're the closest. Yes, they will. Meta, I think that's the best product I've seen so far.
But before we even get to that, Roger, they will have. Chris is going to be able to outsource or sell his data of
so the
people
workers
working
will
in the
be
restaurant.
Training AI to replace their own jobs, which is probably what's
again to Chris's point. They will have better jobs. This business of zero sum is incorrect, because every piece in technology, people thought people would lose jobs. The people who were driving the horse and buggies, became car drivers, taxi drivers. They will find that's the lesson of our economy over the last 200 years with technology in terms of
I think it's true in the abstract
and the
sense,
Fed
but there'll
helped.
be-
Like, listen,
No,
we hate
real.
the Fed, but the Fed helped.
Yeah.
The fucking Fed was involved in this. Like, people don't want to give the Fed any credit. All right, Phil, we got to move on to Gavin
Okay,
Baker.
I got a okay, yeah. Well, I'm just gonna throw out a bunch of questions.
Let's just make sure.
We're covering so many different. Okay, let's go there. So Gavin Baker was recently interviewed by Patrick O'Shaughnessy. He brought up a ton of great information, a ton of great topics. I'm just going to throw, and he's, I think, in the same camp that we are, you know, that this is very early and this is very large, but he brought up a few different areas of discussion. Number one, he talked about the hyperscalers, right? So back in the dot-com days, there were these, you know, companies that had nothing that were buying on credit from Cisco. And then Cisco had a problem when all of these companies went bust. But today, Nvidia and others who are, you know, supplying the AI, you know, whether it's software, whether it's whatever, they are, their customers are these large customers. So just wanted to throw this idea of hyperscalers out there. I was thinking about Google when you guys were talking about data. Just seems to me, I mean, I'm dumb, but it seems to me they have access to so much data historically and even every moment in the present. But just this idea of hyperscalers and these huge customers and where they might be heading.
And then, like as Phil said, listen, I'm a big fan.
Apple with data.
Let's not forget Apple. And Gavin said that. So, in tribute to Gavin, who I only discovered, obviously, I'm not a tech guy, but Mike probably knew him, and Chris and Raja probably knew him, and tech guys are right and wrong, but Gavin has a great career. I only got to know of him because he invested in Koifin, which we were investors in. So obviously, I discovered him, and I'm like, how the fuck are guys like this? This still is always love it or hate opinions. Guys like this are out there sharing, and they've been like you, Michael, and Chris. So you can listen to people like this. Again, you got to curate, and you got to like listen to people like us.
But the depth
this guy
of
is
his
out there
thinking,
delivering you the future. And so, how true is this God thing? I know it's a great term. Are they pinning their ears back, and are they all worried? Is it true that these companies truly are worried about missing this trend? Like, how much is just media selling clicks, and how pinned back are everybody's ears, Michael, Chris, Raj, in your opinion, of the FANG, that they're all in on this? I still am a little bit skeptical.
Just look at the sales of Nvidia and R&D spend of Meta, Google, and OpenAI and Microsoft. I mean, the spend is real. I don't know what they're trying to do.
It is real.
Yeah. And so, but the spend is real. So someone sends you the OpenAI.
It's $1 trillion.
Someone sends you guys OpenAI today. I got a cold email on Grok. That's just because it came in cold email. Okay. I get skeptical when Anthony Scaramucci sent me an opportunity to invest in Plaid Series Q. Why am I getting an email from Anthony Scaramucci for a Series Q in Plaid? And first of all, I know Plaid. I use it. It doesn't work for me. And second of all, why is Scaramucci pitching me a private deal? So that was like in the last bubble. Today, all I hear about from fucking All In podcast is Grok. Okay? Now, maybe it's an opportunity. But the odds of me getting an email to buy secondary cold email in Grok, don't know if that's a sign.
I think
but
that
to
was
me,
a topic
cynical
that
Howard, what the fuck is going on? Why am I seeing this deal if it's in such high demand? And so I worry when I see this stuff.
I think what's going on is, I think this is a question for Michael and Chris and everybody here. It's clear that there is spending. The people want these GPUs. People want, semiconductors, and there's only one company that's able to supply them, and they can't make them fast enough. And clearly, the industry, there's demand for some alternative of that. There's only 3 companies, right? ASML, TSMC, and Nvidia. So there's definitely room for other opportunities and other architectures, other companies. Whether that's my understanding of that is you can't just make that happen in 6 months. That takes, the ramp is like 5-10 years. So
5 years
what,
minimum.
Michael, like what's going on? Like, are there going to be alternatives to Nvidia, ASML, and TSMC?
Unlike other tech
Because I've
curves.
heard Grok, and there's others, Howard. There's
Well,
a couple
Grok now
others.
has competitors. If you
Cerebrus-
talk to Mike,
There's
there's
Israel, next
Cerebrus-
in Israel.
There's at least 2 dozen that I'm tracking around the world. Israel is very key. The next one is Cerebrus. They just announced their inference as a service, just like Grok, 2 days ago. And it's the early results feedback is phenomenal in terms of but these are extraordinarily new chips done in entirely different ways. They have to scale. Chips, as you, to your point, right, it takes at least 3 to 5 years to take something that looks good in the lab, looks good in a few experimental customers, and then to really scale it. At least 5 years. This is why Intel is down 40%, because even though they see the opportunity for inference chips and training chips, etc., to do that, to build a foundry, it's just extraordinarily heavy lifting. And so Cerebrus is out there. They just so my point being, all these competing chips will get a small pieces of the pie, but they're nowhere close to replacing.
But is the
Nvidia.
Demand real, Michael?
Demand is very real. Demand is beyond real. Let me just put it that way. It will ebb and flow quarter to quarter. But if you look at it over the next 2 or 3 years, when we on this call are talking to AI machines and talking to our watches and this thing giving us advice, and all that requires compute.
How about governments?
Governments today are
sovereign.
Great question. Governments are all over AI. Today, every government is convinced, I think wrongfully, that they need their own sovereign AI. Nvidia is doing over $10 billion last quarter in sovereign AI. We'll look for the data line today when they report. And that's an opportunistic revenue item. They're going to find in 3 to 5 years that building their own national AIs is a fool's errand. That's just my personal opinion.
No, not necessarily national AI, but like, weapons, for example.
That's the second market.
System.
Defense is a whole different bucket than the sovereign AI market that I'm talking about. That has nothing to do with defense.
So
defense
the demand is real from all the
demand
sectors.
On the defense side. We are going from basically horse and buggy to machine guns, or we are going from biplanes to Spitfires in 20 years. In every weapon system on the planet, F-16, F-35, aircraft carriers, they're all obsolete. We're seeing it in Ukraine. And that means when you've got a global defense budget in the trillions, all that tech has to be built. Where do you think the chips are going to come from for all that tech? There's only 2 or 3 sources. There's only 2 or 3 sources today. And Grok will have a piece of it if they're smart. And maybe they're bought up by Anduril. I don't know. I'm just making stuff up here on that part of it, but this is a secular wave.
But guys, I think it's extremely important when we have these conversations for most of the people that are listening, because I think everyone goes right into, is the demand real? Are they going to continue buying it? People do not talk enough about the foundation of why. Why is the demand real? Why are they spending the money? Again, I kind of hinted at it earlier. The same way that back at the birth of the internet and then later on assisted by the smartphone innovations, the biggest thing that did, I think, for the world was bring us highly efficient targeted advertising, which sounds kind of stupid. I mean, how big is that world? But that's all of Google, right? It's 90% of Google, the world's largest company, basically.
That's all of Google, most of Facebook, and most of Amazon.
Yeah, most of Facebook. 2 of the world's largest companies is all advertising. And all I talked about in 2000, 2001, 2002 to every single person I knew was they thought I was crazy. I was like, guys, you don't know what this is going to do to and they're like, advertising? Why do you care so much about? I'm like, it's not the advertising you think. It's the advertising that we've been talking about the last 25 years is not the advertising of the next 25 years. You don't understand how this is going to change the world. But this is so much bigger. We are now rethinking labor and intelligence for the next 50 years. We are reinventing what labor is. We are reinventing the word labor, okay? We're reinventing the word intelligence. Both of those things basically encompass all of the world's GDP, and we're reinventing it from the ground up. There is no bigger industry, and we can't even wrap our head around what we will do as humans in our civilization once that
So
code
everybody's
is fully cracked.
IQ.
Okay, so
Yeah.
are we talking about $10 trillion companies, market cap companies, or are we talking about $30 trillion market cap companies? That's what people don't understand. But Zuck gets it, right? Like, you know, all the guys that are making these decisions, they fully understand that. So
Okay, so my question.
Everybody's
So I got a
IQ.
question.
Can I just
Chris,
respond one
Chris
second?
is waking up.
I agree with Chris. The only thing, because we got stock twits on with 1 million people, I just want to make sure nothing happens in a straight line. I am as bullish as this, but everything is going to be up and down more we think. I just want to, this is not stock advice. I just want to basically point out. Sorry, Phil, please.
When
Okay.
everybody's IQ is like 30 points higher because of LLMs, what does that do to creativity? What does that do to the economy?
Thank you. We have a $112 trillion economy. If average IQ goes up 5 to 10 points, you could say Goldman Sachs, right now, my former firm, they have an estimate of 7% incremental global GDP, about $7 trillion in 10 years. I've told Jan Hatzius, that he's low. I think it's at least 10 points or more. I agree with you that we are going to find new ways because we're being liberated. Look, 100 years ago, half of America was working on farms. Today, less than 2% are. What are the rest of us doing? We're doing social media. We created the creator economy and $500 billion economy. We did other things. Humans are smart enough to want to do other things. The market for goods and services that humans can provide is infinite. And technology just helps us, is my view. Again, in the long term, it may not happen in 5 to 10 years. It will probably take 5 or 10 years longer to do humanoid robots and this and that, but it is all directionally up and to the right. For all of that, we need chips and compute. It takes at least 5 years to build it. Nvidia has, for better or for worse, the lock, and that's why they're directionally in the right place at the right time, more than almost any tech company I've seen.
This is a good chart from PitchBook.
As a private investor, Howard, this is a chart that kind of makes me worried a little bit because I think everything that we've said is true, but I think the key insight is this isn't a straight line. Everything that we were super bullish, long term, but there's going to be a lot of roadkill getting there. And if you're allocating to privates today, 42% of all new unicorns are AI. And seed prices for AI startups is like 3 times higher than a regular median startup.
And the cost of running it are 10 times higher.
Correct. I think the benefits.
And it's all variable cost.
Yeah, the deflation, promised by AI, it's gonna come. It hasn't come yet. And
but the risk to enter this game, like I'm out of the game.
The timing.
I'm out of the game. I can't be in the game.
The timing of this, I don't care what you say about the future, but a $50 million pre for a no product company.
I'm seeing it every day. I'm seeing it every day.
I'm seeing that every day.
And I have to say no, which is what Chris and I go to about the investor world. Like, luckily I have the skills of the public. So everybody's now moved to the private markets. And I'm like, hey man, there's 500 small caps that are under $1 billion are probably growing faster than any private AI company that you can buy. So it's like everybody's zigged over here. That's why the public markets are doing well, right? Because you're paying too much to be too far ahead of the curve in an interest rate environment that isn't conducive. Meaning we want all this to happen, at least the good parts to happen. But what we're seeing in the private markets,
people are doing it. I'm glad people are doing it.
I said this goes to the Fed. In the end, if the Fed doesn't do what they're doing, people aren't losing their mind. So you get this tremendous misallocation of capital. And I've always said, like, if it wasn't for crypto, inflation would be 10 times worse.
Also,
people
you should thank
people
the
are burning
wealth,
their money in NFTs instead of spending it on Porsches. So in the first internet bubble, you had the movie Wall Street, which everybody was like, buy fancy stuff. Yes, we have the world, you're buying Ferraris and LVMH, but they're also burning tens of billions in crypto on scams, which is an inflation killer at many levels. So it's kind of like the Fed created its own deflationary. To be honest, the Fed should be rooting for crypto to curb inflation even further, and it would further educate people of the miracle that is investing. but thank God they're not. But I mean, I don't know what the numbers would be if people weren't wasting their time on NFTs and losing money on endless supply things versus spending it on real goods.
Can we talk a little bit about scaling laws and about what you've heard people are seeing behind the scenes? Because I keep hearing that no one's seeing anything to disrupt scaling laws with a lot of the AI chip kind of conversion right now. Like, do you agree with that?
I've been in SF for a couple of days, just talking to some very, very smart people on that front at the key companies. And yeah, the indications are the scaling laws are very real, and they are going to stun us on the upside over the next 3 to 5 years.
Good or bad?
As long as the compute is there. Good. Meaning,
what about the cost of producing the chips?
The cost of producing, again, this is just more, that part is easy. We've known how to do this for 30 years. The costs, Nvidia, when they get the chips right, Blackwell right, they'll sell it for the same price, more or less, as the H100s. It'll just be 30 times more effective on inference or more. It's just the Moore's law is now getting turbocharged by at least 3x for the next 3 to 5 years minimum. Scaling laws are real. It's just that, to your point, Chris, scaling laws don't happen in a vacuum. You need huge amounts of data. That's why I wrote a big piece on data. I wrote a big piece on synthetic data just a couple of days ago. There's a lot of technical detail there. And the data, that's why I'm excited about silly ideas like, hey, your restaurants are going to provide the data, as an example. Data is going to come from a huge amount of places,
and it needs to be inputted. You can't pull it like Google used to do. You need people to input it.
It's no longer off Wikipedia. I'll give you one example, because Sam Altman tweeted this, and you should. I'm converting it into a mug, a sticker. He said, and this is just 3-4 days ago, it's in my post on synthetic data yesterday, 2 days ago. He said, OpenAI today, and remember, this is a company that ChatGPT was barely 2 years old. He said, we are producing new data at the rate of 100 billion words per day. He said, all of humanity is creating 100 trillion words a day. And he's talking about 8 billion people talking and writing and doing everything every day. So that's the bid asked on the amount of data that people are doing. That's just their actions and speaking. That's not in their actions of moving and working in restaurants and working in factories and working in physical jobs. All that needs to be converted into data. That's what goes into the scaling of AI, that all these papers that Gary and others are talking about. That scaling is a 2 to 3 year effort, at least, to curate and put it together. So even though the computations go like this, the time to assemble the next generation chips are 2 to 3 years. The time to build the next generation of a gigawatt data center, 2 to 3 years. Time to build the data and curate it, 2 to 3 years. Time to train the next generation model, 2 to 3 years. That's why, even though the AI scales, the actual implementation at every stage across the 6 boxes of my tech stack take years. So that's the good news, bad news on this. But the reality is, to your point, Chris, the scientists are more than convinced that this scaling is real. And that's why they're looking to figure out how to get investors comfortable with these companies investing. Today, it's 15 billion a quarter. Next year, or next 2 years, it's going to be 30-40 billion a quarter. And at some point, there's a limit. People want, hey, where's the beef? Where's the money? And that's going to be slower to come. So that's where the dislocations are. So as excited as people like us, the 5 of us are on this call on AI and robotics, recognize that this is all up and down. At the beginning of the internet, we talked about this. If you want to look up, Google Amazon.bomb in 2001 and 2002. Amazon was down,
the cover of Barron's, right? Yeah.
Amazon was down 98%. You could have bought all the Amazon you wanted. And most of the bright future of the internet was ahead of Amazon, not behind it. And that's where we are. We are barely at the beginning of the beginning. I don't even know if we're at the first inning. We're at the beginning of just kicking around the balls here. The game has barely started, is my view.
I agree, and especially I'm still bewildered by how underappreciated and underinvested everyone is in AI robotics. It's mind-blowing to me.
Me especially.
I feel like I feel like AI robotics is where we were with a lot of this ChatGPT stuff a couple of years ago, when there's like 1/100% of sophisticated investors even knows anything about it. Like, it's just mind blowing to me, the lack of just curiosity and work that investors are doing in that space to even understand it. It's just, I think when we'll be sitting here in a year or 2 years, and we'll look back and we'll be like, we were all focused on this, and yet AI robotics is maybe the biggest industry humans have ever seen.
Well, it's China in a box. It's China.
Agree with you.
It's China. It's China.
Yeah.
So meaning, but
China
this goes
gets
to the
it.
Fed.
China actually gets that.
I understand they get
China,
it because
China is all over this. And I just did a post on robotics. China, I think, wins this in the next 2 or 3 years because they're manufacturing it. The biggest problem with robotics, whether they're humanoid or non-humanoid, is making the stuff physically. China has all the components, all the supply chains. We barely have it. Yes, Tesla can do it, but Tesla is literally has not put a factory in the ground on Optimus. They will have to do it in China. There's a term I wrote in my robots post that Tesla in China right now, they just got permission to do a robotics thing at the Optimus in China. And the Chinese companies are using it, they call it the catfish effect. They're inviting Tesla in to China so as to energize all the other robotics companies to look at Tesla and kill it.
And then get and then
that
get
is
the tech.
thing.
And then that's
they're getting the tech. Exactly.
Yeah.
And so I agree with you. Everyone should look at Chris's pinned post on his Twitter account on the 15 points of why robotics is big. I couldn't agree more. I would just add a few more years to that. I agree, but we're at the beginning stages because a lot of work has to be done.
Chris is asking why, and I think we can answer that, right?
Yes, sir.
Everybody was focused on it. Facebook and Google usurped everybody's time and energy and degrees and attention to focus on pixels and ads. So what the money printer goes burr is great, and it's evil. It leads to misallocation of capital. It's up to people to go through this the luxury of information overload, which isn't going to go away, and it's filter failure. So what's hip right now is Joe Rogan, all in, politics, picking sides. And it is easy to get trapped in it, right? And that's the misdirection. It's a global playing field. And if you're caught up in the line of scrimmage, you're kind of missing the big picture, right? It's kind of like QVC happening before the internet. QVC, everybody was buying doodads to put in their garage and thinking QVC was going to be the future of shopping. And then along came multi-channel with the internet. And while everybody's printing NFTs and arguing whether art is securities, AI came along, right? Now, crypto has its use, like it's an exhaust. It's a great way to curb inflation and hedge inflation. But that's about it so far. The real thing is AI. The real thing is machines. Like as Brad Feld said, you can't turn them off. And the real thing is, where is America going to fit into this? Because
that was going to be my question: is what Chris and Michael, clearly for AI, it's talent, and if we go into robotics, it's manufacturing. Which cities, geographies, either domestically or internationally, are in better position to really take advantage of this?
Yeah, where should kids go?
Shenzhen in China, and anywhere in the U.S. that Elon decides to put an Optimus factory is going to see. Go ahead, Chris.
Don't count out Mexico.
Mexico, huge. Yep, correct. Yeah. I agree.
Yeah. Does Mexico have the mid-level engineers, Chris, that you need?
No, I mean putting together a supply chain for the future of robotics that I hope the U.S. will play a very big role in. I think it sounds like South America, Mexico, that supply chain and manufacturing chain there will be a big part of that.
Michael, what about India?
India is going to be there. They have secular reasons. They're not optimized. They don't have the infrastructure, ports, roads, factories. Apple is investing heaven and earth in India. They're making 15% of the iPhone.
Foxconn is building their second biggest campus.
But the average cost, we don't know the real numbers, are at least 10% higher because of the supply chain inefficiencies. India has to do a lot more as from the infrastructure point of view, top
And
down.
they've got the engineers.
They're unemployed. This is not about engineers. Let me give you guys one number, if I may, because Chris talked about mobile, and Howard, you talked about mobile as a big wave. 2007 to now, the iPhone industry, Apple has employed over 33 million people in China to make all the iPhones and iPads we've consumed as a world. Okay, that is bigger by 6 million than the population of Taiwan. Okay, most of them were not engineers. Most of them were people from the rural parts of China who came in, were trained how to assemble. And that is where most countries, when they're building factories, we only think engineers and PhDs. That's the beginning.
So is that going to be robots, Chris? The assembly line?
But the robots, again, I'm sorry, I didn't mean to jump on it. Robots will help, but again, because of the data and the making the robots and scaling them, that's at least a 5-year game. So robots will help, but not tomorrow. Sorry, Chris, please jump in.
No, I agree. I mean, I think honestly, the robots, it's everything. It's literally, it's a third of global GDP is the physical labor, and the physical labor is the one thing that we could pretty much all agree on needs to be eventually completely displaced, so we can have a higher use of human human labor in the future. So we're talking about $35 trillion a year in physical labor that needs to be displaced over the next 25 years, 30 years.
I agree. Again, I'm going to be a broken record. It'll take 10 years longer than we think, only because of a lot of component issues, stack issues.
Go ahead, Phil.
Okay, so here's a question for everybody, because we're an hour plus in, and I just want to move it along. How are you investing for the next year, 3 years? Any
Chris,
wisdom
around
first. That? Yep.
Chris, I know, but go ahead. Just talk about it.
I built up a very large Nvidia position. Everyone in my community knows it. Starting in late 2022, it's grown to be very large today. On days like today, I spend roughly a small track home house build to hedge that position partially for one single day. And the reason why I'm doing that today with put options on my Nvidia is because if you look at ANF this morning, Abercrombie, they beat and raised, like I assumed that they would. They had one comment related to 2025, the economy might be a little shaky. We're a little worried about the back half of the fiscal year. Even though they beat and raised, the stock got murdered today, completely crushed. I think it's down, I don't know, 12, 13, 15%. It won't take much to really shake up Nvidia. If there is anything negative on the Blackwell release, if there's anything negative on margins, if there's anything even mistakenly said that is misinterpreted by the market, it could really be devastating temporarily for a company like Nvidia. So for me, I'm maintaining my long position in Nvidia. I foresee me having that position for years longer, not months longer, with hedging it on days like today, as painful as that is, when I think there's that high risk.
I would second Chris's position. Nvidia has been a long time position for a very long time.
Mike, I remember you. Yeah.
No, so my secular belief, just because of the tech stack, is so strong long term, not quarter to quarter, is that I'm saving the hedging money to buy if it comes down. So that's my methodology. But the one thing I will say is that if I'm looking for nitpicks as to what on the quarter they could, and sometimes companies like to throw out some kitchen sink bad news to calibrate, because it doesn't help companies to have their stocks always go to the moon. There was a great article I wrote about it.
Is a thing. You better
got an issue. They've got,
it.
All their employees are millionaires. They've got green Ferraris in the parking lots. They've got to temper that. And so one way to do it is to bring up some negative things. And what are the negative things? Blackwell. That's 3 to 6 month delay. They could. I would not. I would. I would not be surprised to see them say, "Oh, Blackwell is going to take 3 to 6 months." We got overplayed some of the issues they've got with it, or describe him more, and that could temper the stock a little bit, even if they meet and beat. which I expect, they probably will. But my point is that the Nvidia, for now, despite Grok, despite Cerebrus, despite all the companies that are trying to build everything and around it on training and inference, is in a relatively demand secure place for several quarters.
Raj.
Yeah, so as an allocator to private, venture firms, especially seed and pre-seed, that chart that you put up earlier kind of worries me a little bit. If we think AI and robotics and all this is as big and as transformational as we all think it is, this is going to be a long game. So we're being very cautious about getting too much exposure to seed and pre-seed in AI. Which I agree with everybody here that this is going to be huge, but I think we have time. So we're being cautious and we're being very value conscious.
Good.
Chris, quick question. Chris, you say you get access to OpenAI 150 billion valuation today with your net worth. Do you allocate to that, or you just move on and invest in Nvidia?
I'd consider it.
Okay.
I have considered it before. I would consider it as part of. I want to have a piece of every part of this AI infrastructure new economy. So I wouldn't overthink it too much. I want to have a piece in every part of it. I probably am overweighted right now on the humanoid side of the picture, which is mostly, everyone keeps asking me, how are you investing in all the humanoid companies? Well, I just took an interest in them years ago, so I have those relationships. But I'm invested privately in the humanoid companies. I have not put my big humanoid trade onto Tesla yet, though. And I do want to say, because I don't like the risk in the short term of their auto division. I've always hated their auto division. But at some point, I'll probably put on a monstrous trade for Optimus, for Tesla. It's really the only way for most investors to have access to AI robotics.
Right, that's how public markets mix with private markets.
Yeah.
So I'll say for me, the way I'm doing it, I'm long Nvidia, but scaredy cat at my age is, I tell people about FREC, one of our portfolio companies, FREC. I just direct index because the volatility creates tax loss harvesting opportunities in this sector. And SMH is very overweighted to Nvidia, as any market cap weighted index is. But, look for big down days and allocate to SMH. You'll get the benefit over the years of tax loss harvesting on these down moves, because they can sell a loser to add another semiconductor winner, and that's how you participate without panicking, I call it, or turn your panic into participation.
Yeah.
And that's what simple products like this do. You don't have to overcomplicate things.
You want missteps, right? Like you talked about the roller coaster. Like I keep telling, it's the one thing that I always tell retail investors, why the hell are you guys all complaining and pissed off when the market's down or your favorite stocks get crushed due to something that's unfair or market maker? Like that, do you not understand? That's what you should be dreaming about. Like, and I'm old, like my actual income, like from my businesses, is relatively low compared to my investable income, the amount I have invested in equities, right? But if I were younger and the amount of money I'm making from a job was a higher proportion of my net worth relative to the amount, like, you don't want this market to go up. You don't want these stocks to go up. You want them to get punished. You want people to do stupid things. You want people to overreact. Like, that's the one thing that drives me nuts about retail investors. You want Nvidia to get crushed today. You want it down 30%. I don't care if it's your biggest holding.
Well, you just had a chance, right? Big 60s. So they're smart investors. Yeah. So
Chris said it better than Warren Buffett. I loved it. That's exactly what Warren tells you in more muted tones. I love it.
Yeah. When you hear panic, you should participate. So one chart I wanted to leave with, Phil, that blew my mind. I don't know how we have to talk about energy, right? Like, what dwarfs all this? I looked at Saudi Aramco's. I saw this going around. I don't know if it's true, but you guys would know. Phil, if you could pull up the Saudi Aramco.
We have that one at
net
the end
income.
of the
Yeah, the net income of Saudi Aramco is bigger than Tesla, Nvidia, Amazon, and Meta. And I think if you ask 99% of investors that invest in Magnificent Seven, they wouldn't wouldn't know this. So when you look at this chart, guys, before we what do you think about? Because this is a constraint, or is this an opportunity? And how does this? Think how small we are.
Well, if we believe that there's going to be $1 trillion build out of semis and data centers, then we don't have enough energy.
Exactly, and every data center, 40 to 50% of the money for that data center is in the power. Most of the power is going to be this stuff, and over time renewables. So yeah, I think Saudi's okay. 7 trillion is the number that Saudi is supposed to accumulate at least over the next 5 to 10 years in terms of oil, and I think that's probably in the ballpark.
This could be why also the Saudis are fed up with terrorism, even though they're not. Like, it's sorry not sorry. Like, this chart explains a lot of politics. Sometimes these simple little charts that simplify the world to me. I just don't know if it's true or not, or what it means. But if it's true, energy is underinvested in. I would think.
And Howard,
batteries and renewables.
Batteries and renewables. And Howard, to your point, degenerate economy. This is why the Saudis are buying up every sport on the planet, because they've got a lot of investable profits coming out of this stuff for a few years, and they're long the world. They want to be long the world.
Yeah, I think be careful who you follow. This is a hell of a panel, hell of a group to get. I was worried that Chris might have taken a downer, but he came on strong.
Howard, I had to start slow because this topic. If I start fast, it's just going to end up.
No, I mean, this might be
insane.
Listen, it's easy to look at the charts that we do every week, and JC, Phil, and I, and Mike have been talking about so many uptrends happening in the world, despite the headlines getting worse and worse. New York Times all-time high. I've been talking about this for months. Stop thinking the New York Times is a news company. Look at their stock chart. If you expect any real news to come out of them, they're being paid for that stock chart, not to deliver news.
Right? You mean the Wordle company? You mean the company I play Wordle on?
The Wordle and podcasting opinion company, right? Like, it wouldn't surprise me if they bought the All In podcast. And because it would be a good acquisition for them, because they're not about news, they're about opinions, loose, strongly worded. And so, in a world where the New York Times is at all-time highs and only in such an influential company for $8 billion market cap, be very careful about how you consume information. Because it is their job to trust an $8 billion valuation that's moving in one direction, which is fake opinion and clicks, versus truly understanding how money is flowing. We've never been in a weirder time as an investor, because this is why the VIX hit 60 so quickly and then corrected. There's a lot of smart people that want to take Nvidia out of your hands and the SMH out of your hands right now. That's what the quick bounce back says. So, like Chris and Mike say, hope Blackwell. Hopefully they come out and say they misplaced the file. The Blackwell file's gone missing.
We can't find the chip,
and it's with the Coke formula. And they come out with new Diet Blackwell, which is just a leaner GPU. And then you got Ozempic. You've got Ozempic that's killing,
Howard,
which is
you
real.
Don't remember this, but who lectured you?
I don't remember what I had for breakfast, Chris.
On how big that stuff was going to be years ago when no one else is talking about. And you're like, why do you keep talking about these weird diet drugs with Ozempic? Do you remember that conversation? Years ago.
Yeah, no. And I'm tempted to do it myself, to lose the last 5-10 pounds and beat Raja up a mountain. Go ahead,
Speaking of your health, I have one last investment idea. And so we're seeing so many unintended consequences. The mobile device was supposed to free up all of our time, and yet we're more busy than we've ever been. We can't stop. We're 24/7, and we're about to get another one of these step changes in the way we live. Society is even accelerating. It's like one of those compounding interest charts that the slope of the curve continues to increase. And so the world is changing very quick, and there's a lot of depression out there. There's a lot of obesity. There's a lot of ill will, and a lot of, this whole political mess and all of that. And so my recommendation would be to invest in your health, because things are going to get even more wacky, way more wacky. And if you're able to keep your self-centered, take care of yourself, your metabolic health, get outside, get away from the phones and the computers and all that, you'll have a huge advantage going 10 years out, 5 years, 10 years out, when the world looks incredibly different than it does right now.
What a downer. Yeah. What a downer you are.
No, it's an upper. Get outside.
What
about an exercise yourself?
What's your sleep score last night, Howard?
My sleep score was Ellen woke up at 4 yelling at me. So you guess my sleep score. I would say -4. And you all know Ellen, so you don't want to fight with Ellen. All right. So earnings after the bell. What a great panel. We'll have you back. I think I learned a lot. So thanks, Phil.
Let's hope they get destroyed so we can all go buy more.
Yeah. So tune into the earnings on StockTwits. We got StockTwits Nvidia. We got StockTwits Store now live. But thanks everybody for coming by. Trends with Friends, everybody.
Thank you.
Subscribe on YouTube.
Thank you.
And share it, everybody. Thanks, guys. Talk to you soon.
Thank you. Nice to meet you all. Thank you.
Cheers.
Bye, guys.